you can see that the passive side can move the market more aggressively or more forcefully by manipulating the passive orders, by playing the game, simply placing the large, huge orders as a protection or as the driving force to produce the pressure on the level two passive side of the market. And this is, for many of you, even who used to trade the volume or volume profile, will be a huge bingo, a revelation that the volume profile is not enough. The volume profile reflects the aggressive side of the market, which happens in the history, but it doesn't show you, it doesn't expose you the passive side. That is why it is the detrimental for you. If you want to get much better educational reasons or educate yourself and see the moral reasons for the signals, for the more co-influence or co-factors that you can combine on the same chart like you're seeing right now, from the passive side and aggressive side. And when both of them united in the same direction, you will see the huge moves in the market, very strong, predictable move in the market. And you can tap in that to gain your profit. You will see the better positions for your stop losses, for your take profits, and you get much more confident why you have the system for execution. Because when you have the complete x-ray of the both sides of the market, you will see when these forces united, delta 1 and delta 2 united together, you will able to execute with much better predictability, with much better chances to be in profit. Do you want to gain that edge? Then the only chance for you is to simply use both sides of the order flow, visible and invisible. To do that, you need special indicators. This is not EMAs. EMAs is simply a formula calculates what happens in the past. You need the other type of the indicators that is based on the data provided by the exchange. Your forex broker is a nothing. They can manipulate the data. They don't have the exchange that show that everybody, let's say, on the forex sellers and buyers. They don't have that. But exchange like CME exchange, it is the unified platform where everybody, buyers and sellers, can be trackable. How many orders do you have? What volume lots do you have? And when you position yourself in a passive limit or in aggressive side of the market, we can see exactly how many orders and volumes being sold or bought. And the same on the passive side. We can see exactly, even we can track a particular big player if that big player execute with a multiple entries to sell or to buy. The exchange provide us special order ID. With this special order ID, we're able to see even deeper, okay, even deeper than X-ray. And we can produce you another type of the signals, which called the icebergs. Based on the MBO data, we can provide you a big trades, which is not just simply what other call the big trades indicator, but the big trades based on the order ID that attached to each buy and sell trade. So this is the new level, new mentality for the most people who thought about, hey, I need to trade the volume. But the volume on the trading view platform is the fake volume. because they don't have the data that provide them that intelligence. Okay, they simply doing by the T calculations up and downs, but the only way to trade with the real data is to get that data from the CME. It's one of the exchanges, right? To get the data directly from them and use it with the special developed indicators that are capable to digest, to comprehend, to formulate, and to produce you new type of the signals. And when you see the signal one, signal two, signal three, signal four united together, they're showing you, okay, now we are cofactors for the long or for the short. You will be much more confident simply relying on the structure alone. Okay. The structure is absolutely important. But what defined the structure, what's more important than the structure, is the actual liquidity that provided only on the hidden level two orders, limit and passive orders. It's not the structure that defines liquidity. That's what most people believe by relying on ICT and the price action. That the liquidity is simply grabbing the previous top and the previous bottom. Liquidity is white. Guys, this is the completely bogus BS mentality and the ideology. It's a brainwashing BS because structure is built when the range is going up or the extension is going up, the cap is going up by the liquidity that provided and visible only on level two by the passive orders. And that's why the structure meet the ceiling of those orders. The limit side of the order flow, the passive side of the order flow, the invisible side of the order flow for most people who doesn't have that data, who doesn't have those indicators. That's why they rely only on the structure, but the structure is the secondary to the volumes sitting on the passive hidden side of the order flow. Okay, so now instead of relying simply only on the structure, you need to understand why the structure hits the up and bottom or swipes, because there's a liquidity that's not never visible to the people who only believe or rely on the structure. Now, let me show you what you're seeing right here on the right side. This is DOM. DOM is called the depth of market. This depth of market show you the hidden or passive or limit side of the orders. Those that resting and waiting until the price gonna come and trigger them. Big institutions use that most of the time. You can use it as well. We use small orders, but that's what they use. Now, as you can see on this DOM depth of market, because the aggressive side of the market is called the top of the book. The passive side of the market called the depth of the book. Okay. Now there is another third level when we can see the depth of the book, but instead of showing the how many orders, we can see individual orders, and that gives us a fantastic, tremendous advantage. For example, you see that there is a like on this very DOM, you can see, let me make it a little bit larger. Okay, there's somebody put like four lots, and totally it's 17 because the other ones that I filter out, they're simply ones or twos or anything that below the four. Now you see that this person put actually 10. This one order is 10. This is larger. I can scroll and I can see there's other serious people right now. It is before the market getting close, like in 8 minutes. So the people actually already um, on this Friday is left the market. But anyway, this is the 12th. This is the we're seeing that this person have a 12 lots in order, 12 volumes, okay? And totally number of the orders, there's a 5 orders. That means there's, let's say, 5 people in that village, okay, or neighborhood. So we can see if there's some orders are very strong, and when they actually sit for a long time, you can see these orders reflected on the heat map over here. So this is the heat map. I filter out insignificant volumes, and this is 51, this is 77. So, but the heat map show us what happens on the passive side on a book of depth in history. This is the historical, and on the DOM, it is the immediate situation. So we can actually see much more details, because sometimes if you don't see the numbers on the DOM, that means you have no way to distinguish between the market maker and other participants. When I see the numbers on the DOM, I can split between the market maker, who is always jumping up and down and changing their position, because that's what they're doing. Uh, but most importantly for me is the other traders who are seriously sitting there. And I want to see the difference between the market maker on the DOM and other participants by the ID that shows me the size, because market maker usually they have the exactly the same size. Let's say 200. You can see it on gold very easily: 100, 150, 240, 300. That's what they do on the gold. Easy to see, easy to spot. They always move that on the same distance between the price line. Okay, it's easy to see the market maker. Now, this particular detailed DOM, this is the MBO market by order DOM, which people called like a third level 3, okay, but it's a nickname. There's no level 3. It's basically level 2, but the people in the jargon saying it's level 3. Anyway, so this is the level 3, or actually level 2, but detailed level 2 information on the passive side. And you can see, by the way, you can see how they form the icebergs. You can see even formation of the icebergs on that very DOM. You can see that they put container for the volume one with one lot, and then they fill in that container with 10, 20, 50, 60, 100, 600 lots into the one small container to fool everybody on the market. Our DOM is capable to show you that. You can see that in real time. I actually have the demonstration on our website, so you can watch the videos. Anyway, and the historical record of the passive orders on the heat map. So the heat map is actually what provides the liquidity and defines where the bottoms and the tops. As you can see, this is the market, this is the candle, and actually this is the top of this range, which we climb it, and you see the reason why this top is formed over here, because there was a resistance on the way. First, it was about 48 in volume over here, and then it was about 81 in volume over here, sitting for a long time. And so the buyers exhausted. I mean, they get thinner, and then they saw that at the very top out there is a still sitting, by the way, in real time. There is in real time is about 32 in volume, but it was at the moment when this top was formed, it was about 69, 67. Okay, yeah, about the 67 plus minus in volume. So the buyers were like, yeah, they bought this liquidity. Yeah, here we go, we're going up. They bought this liquidity. Here we go, we're going up. We bought this liquidity. We don't have more power. Now, what you're seeing over here, that they being probably some of them stopped because of these passive sellers sitting right over here. This is the passive sellers. And now, if you take a look at the each candle, you can see easily what's interesting. You can see that these buyers, and it's on a footprint. Footprint is absolutely, you can't replace the footprint. Okay, it provides you the detailed information on the aggressive side of the market, buyers and sellers. Okay, buyers and sellers. And now you can see that over here 49, 58, 63. Those buyers created imbalance on the way up, but they being smacked by the level two. And you see these rectangles, pink rectangles, that shows that the price traveled down in this candle. And this is the clearly absorption. What is this telling me? It tells me a two type of information. First, of course, you can see that in this candle, the buyers get exhausted. You see 1, 5, 1, 10, 20, okay? They get exhausted. After they were very active in this candle over here, in previous candles over here, they were very active at the very top of the candles, which you can see with the bluish color. But then they start to get exhausted. Okay, just a 0, 1, 0 to 5 at the top of the candle. That is a sign of exhaustion. You can see the few waves of exhaustion. And now you can see that they tried to go again, but the level two didn't let them. Okay, so now that is the absorption. And this rectangles is the absorption indicator on the
blah, 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 or reverse with price, blah, blah, right? One or the other. We already have that information. But if the market gets back inside the previous day's range and gets new buying inside the previous day's range, we then ignore that. We say, we don't care anymore about the spike from yesterday. We don't care anymore about the gap from today. We're back to momentum, baby. The bulls are back in charge. And then we look for the market to start to work its way higher. If you're looking for intraday targets to the upside today with a high probability of being tested, you basically have Friday's opening price at 72.64. You've got a volume point of control, an untested volume point of control at 72.73. And then you got the overnight high at 72.80. Okay. So the market gets back inside yesterday's range. It starts spending time. It starts bringing in volume. You're feeling confident as a buyer. You get long. These are areas you might consider taking profits, although it is possible we head all the way to the all-time highs. It would not be unreasonable for us to work our way all the way back up to those all-time highs if we get that new buy inside Friday's range. Okay. Any questions on any of that from the chat? To me, today is super easy. It's down. The target at 72.35, unless we get above 72.56 and get new buying. Get support there. Thank you, market. May I have another? Jay in the house, good morning to you. Tom is here. He says, tape bomb trading at its finest. Yeah, boy, this market, just look at it the last few minutes. It's a movement these days. Silver Media in the house. Rich is here. Will, good morning to you. Derek, welcome. Trevor in the house. Michael is here. Frito says, but if we break 72.08, 7,200, look out below. Could be Thursday's low or near it. Yes, if we re-enter the old balance, we could sell off. But like I said, there's no reason for me to presume that right now with all the momentum we had on Thursday. You know, with this many single prints, it would make sense to come back and backfill them. It doesn't necessarily mean we have to go much lower. This is momentum. You know what I mean? This is people buying. So food for thought. I agree with you. If we start to get that new selling, then we'll talk about a move lower. But we really got to see that new selling first. Exploring CME in the house. Laura is here. Victor, he says, what about the Russell? I could look at the Russell. Yeah, it's basically the same as the ES. So it's the same story. You got a balance area high. Yeah, I mean, you could say that this is still in balance. This hasn't really broken out of balance yet. This is your balance area right here. So I would say the Russell is actually bearish because at this point in time, it is more likely to head back down. But if you get back above Friday's high from last week, then you can be bullish because that's a breakout of balance. But right now, I'd be neutral to bearish on the Russell, purely based on technicals. It's a simple idea of balance. It sounds so simple that it can't possibly work out like this, but it does. The market goes to one end of the balance, and then it tries to go to the other, and then it tries to go to the other, and then it tries to go to the other, and then it tries to go to the other. If it can't break out, if it can't actually get continuation, it'll go to the other. It'll just keep going back. So it looks like at the end of the week, last week, they were trying to break out, but they weren't quite able to do it yet. So you're still in balance right now, which means that the higher probability is a move down. But wait it out, you know. Let's see how the ES handles the gap down this morning. If the ES gets back inside Friday's range, brings in new buying, well, then maybe the Russell will be ready to break out to the upside today. But I don't see it yet. So I would describe myself as neutral to bearish on basically everything across the boards. Jad's in the house. Auntie is here. Good morning to you. If you are watching this from the Discord, You can head to the English traders floor and you can leave your questions and comments there. Good morning to Trader and Stephen. We're hanging out there right now. Let me know if you guys have any questions. We still got, 15 minutes till the market opens. So I got nothing to do but wait and see if we open with a gap or not. Let me know if you have any questions. Frito says the 9 a.m. tape bomb was South Korea checking whether the Korea vessel was attacked in the Hormuz. Oh. War in Hormuz. To be continued. Oh, happy May 4th to all the Star Wars fans. This is the way. Good morning to Pat, hanging out in the Discord. No questions from anyone? What are we going to do for the next 10 minutes, y'all? All right. Well, we'll come up with something to do. Let's take a look at some different markets. See what's happening in the world. Take a look at the NQ. It's basically doing the same thing as the ES. No, actually, I would say the NQ is in the channel. It is a very, very slanted channel, very upward. So that still plays into the same narrative as the ES. Yeah, so funny the push pull between the different markets right now. So ES, I would say, is neutral to bearish. Okay. And Russell, I would say, is bearish. And the NQ, I would say, is neutral to bullish. WTF? What's going on? People are loving tech. War. What is it good for? AI stocks. So yeah, actually, this looks bullish on the NQ. So on the ES, we have signs that the momentum up is over, right? Because we have the spike down at the end of the day on Friday and the potential gap down this morning. Okay. Well, on the NQ, we have a totally different chart. They have a P-shaped profile from Friday which is actually bullish. Obviously, no spike down. They closed in the upper end of the range. And they had the same thing in the overnight. They spent most of the overnight in the upper end of the range, and they even made new all-time highs in the overnight. So this is actually a bullish setup on the NQ, neutral to bearish on the ES. Very interesting. Gonna be a little tug of war here. Monty says, when I look at the Bitcoin, yeah, let's take a look at the Bitcoin. I have to admit, I'm surprised by this rally in Bitcoin here. Yeah, man, everything seems like it's right on the cusp here. Okay, so Bitcoin is bullish right now, but it's got to really break through and stay above this resistance right here around, let's call it like 79,000. It's got to get through there and come back down and turn that into support to really look for that next big leg up to like 90. So you don't need to feel a need to FOMO in right now at 79. You could wait for it to break above, come back down, find support, around 79 or 80, and then you could look for a move up to 90, potentially even like 98. But for now,
will begin guiding neutral ships through the Strait of Hormuz starting from today. OPEC Plus agrees to a symbolic production hike in June, sending a business as usual message after the UAE's sharp exit. Plus, GameStop pitches a takeover of online marketplace eBay for $56 billion. It has just gone 8 a.m. across the Emirates. I'm Shweta Ratechi. And by getting you up to speed on these markets, a lot went down over the weekend. But just in terms of markets, we're getting once again a more positive handover from Asia Pacific. Japan closed for a holiday, but we'll get into some of the details. But essentially, what you're seeing there is more of what you had last week. A lot of love going into AI, into tech. Similar theme in the US too. We had a positive close for Wall Street by the end of the week last week. S&P futures today also leaning up towards green. I will tell you that in this earnings season so far, 81% of companies have beaten expectations. So from a micro perspective, the earnings continue to be quite robust. And of course, towards the end of the week last week, we had more of the Magnificent Seven, Apple as well, really setting the tone. So the bar was high for Magnificent Seven, but I will tell you that as far as markets are concerned, we got beat. There was enough that came through from those big companies to continue propelling this rally forwards. European markets in focus today. We are leaning towards positive, but I will say keep a close eye on geopolitical developments with Trump once again announcing auto tariffs. We'll get into that later in the show. So let's see what the impact is going to be on the auto industry. Once again, this has become an issue. Tariffs at the forefront of the discussion as we walk in on this Monday morning. And then Brent, back in focus. $108 is where we're at. So we will get into this story in a moment, but essentially overnight, President Trump announced that the U.S. were going to start helping some of the stranded vessels in the Persian Gulf get through the Strait of Hormuz. Still, some lurking details surrounding exactly how that program is going to work. But initially, what you got was a dip in oil when those headlines came out. And then as people sort of pieced together the lack of clarity on this, we rebounded back to flat. So Brent is still back at $108 here this morning. Now, dollar yen also in focus. We've really actually just rallied quite a bit in the last 15 minutes or so. Once again, the yen gaining ground versus the USD. And of course, the big story for dollar yen last week was that Bank of Japan intervention or suspected intervention that hasn't been formally confirmed yet. And indeed, the finance minister didn't say anything to that effect when she was asked about it. But the point is, we have traveled around 4 big figures since where we were towards the end of the week, and does suggest that something is going on there, at least in anticipation of maybe another round of intervention, or at least that 160 is sort of the floor in the sand of where Japanese officials are happy for dollar yen to end up. And then finally, one other thing I want to show you just in terms of volatility around equities. Yes, we've been talking about a lot of oil volatility, but VIX down to 17, and you can see this is week-to-week gains for the S&P. It's been back-to-back weekly gains for the U.S. major for all of the month of April. And in fact, April was the strongest month for the S&P, going all the way back to 2020. So that winning streak has been crushing volatility. All right, let's dig in further detail in what's happening with some of these Asian markets. Avril Hong is with us from Singapore. Avril, walk us through the price action.
Own wealth measured in generations. Long-term wealth built by 125 years of expertise. Brookfield. Own what's next.
How was your day?
Yeah, Jumana, the price action is showing a very strong rally in the region today, and this is without the help of Japan markets, which are for Golden Week. You're seeing the rally powered by South Korea, Taiwan, tracking Wall Street's record, supported by a slew of positive mega cap earnings. In Asia, you have earnings of their own to support the fundamentals for this rally. You're looking at TAIEX being propelled by MediaTek, which upped its AI chip guidance. Now, flip the board,
you were just talking about the spike we've been seeing in the yen in the past 15 minutes or so. Of course, we are watching out for further official support, given how the fundamentals for the Japanese currency are still working against it. And we are, of course, following on from what we saw last Thursday, Friday, where there was reported intervention. This is what is at stake for the Japanese yen for the moment. We are sitting around the 156.4 handle, but note also because of the holiday, there might be thin liquidity, which is what our M Life colleagues are highlighting, that might be exacerbating some of these moves. Joanna?
Yeah, exactly that. It is a holiday in Japan today. So maybe it's just a function of thin liquidity, what we're seeing this morning, April Hong in Singapore. All right, our top story today. President Trump says the U.S. will begin guiding some neutral ships trapped in the Persian Gulf out through the Strait of Hormuz starting this morning. Posting on Truth Social, Trump also writes that the ship movement is meant to free up people, companies, and countries that have done nothing wrong. Meanwhile, U.S. Central Command says it will provide military support to restore commercial shipping through Hormuz, including the use of guided missile destroyers, aircraft, and drones. For more, we're joined by Bloomberg's UAE Deputy Bureau Chief, Abir Abu Ammar. So maybe let's just start with this plan that President Trump revealed overnight. What do we know about it? And why is it that, looking at the price of oil, went back to flat on the session, essentially?
Yeah, good morning, Joanna. So it's dubbed as Project Freedom. This is President Trump's plan. It starts today, according to him, right? And it's about the U.S. helping stranded ships that he calls neutral in the Strait of Hormuz to cross through. Now, we don't know how this is going to be carried out. The Wall Street Journal did report that the U.S. Navy is not going to escort those ships. But as you quoted just now, President Trump did say that this is to help companies, countries, people that have been stranded. And the response that he got from this came in the shape of a response from the head of the Iranian Parliament's National Security Commission, that is Ibrahim Azizi, who said that the movement in the Strait of Hormuz is not going to be carried out according to President Trump's, and I quote, delusional posts. So we're yet to see how this gets carried out in the Strait of Hormuz, but it's supposed to start today with the U.S. Central Command also helping the military move in the Strait of Hormuz.
The American Trade Organization reporting as well that there was a cargo ship that actually was susceptible to missiles or projectiles early in the morning. So something to be aware of there, underscoring the danger. Abir, where are we with the peace plan discussions now between Iran and US?
That's a good question. So President Trump yesterday did say before announcing this plan that he's not completely satisfied with the proposal that Iran put through. And Iran did put through via Pakistan, who's been mediating this, a 14-point proposal. Now, what we know out of this proposal, we don't know all the details of it. Some of it could be pretty much a replica of what we've seen in previous proposals throughout this war. But what we know is that Iran is suggesting an end to the war, a complete end to the war in a month's time, a complete unblocking of the Strait of Hormuz, and end to the hostilities in Iran and Lebanon. And then once that month is over and they both come to the table and agree on that, that is when Iran's suggesting a further month for nuclear program talks. So President Trump did say that there are positive discussions that could lead to positive things that come out of this. And then he said he's not satisfied. And this is what you're seeing reflected in oil prices, Jumana. As we said, oil opened a little bit lower and then it stabilized, and now it's ticking up just a little bit because, we're in a state of, are investors convinced about those talks? Are they convinced that there will be a discussion that would end in fruition? That is what Brent is reflecting today.
Yeah,
just not for
a long-term breakthrough as well. That's the big question. Abir, thank you so much. Bloomberg's UAE Deputy Bureau Chief, Abir Abu Hamad. Well, joining us now is Commercial Bank of Dubai Chief Economist Deepak Mehra. Deepak, really good to have you with us. Let's just build on the conversation that I was having with Abir there about the state of the conflict. And we seem to be at a bit of an impasse right now. It's a frozen conflict, so to speak. Ceasefire in place, but the strait is still effectively shut. And yet equities are telling you a very different story from what oil markets are telling you. Is it just a case of the longer this goes on for, the more that other markets, and here I'm not talking about energy, I'm talking about equity and credit, are going to have to start paying attention to the energy second round effects.
Good morning, Jamala, and thank you for having me. Yes, absolutely. We are in a sort of a frozen conflict, a frozen war, where de-escalation and escalation both look, unlikely in the near term, and therefore Strait of Hormuz remains shut, and critical energy elements, chemicals and fertilizer, all don't reach the world. Now, for the time being, the world has been drawing down on oil inventories, so we haven't seen really a big spike in oil price except for the momentary one last week. But how long can the world keep drawing on these inventories? At some stage, that will become difficult. And therefore, we worry about the second order effects, where the lack of supply then leads to demand destruction. And that demand destruction can then be very harmful for the economy and also to hit the job market. And we have a case that if this continues longer, the Fed may be forced to cut rates, not for the right reasons that inflation is coming down, but for the wrong reasons that the economy gets stalled at some stage. So that is a very likely scenario. Now, as far as equity markets are concerned, Jumana, equity markets are less sensitive to what is happening. I mean, you look at the intensity of energy in US GDP or household consumption of energy, these have all been coming down significantly over the last decade, 2 decades. So it doesn't hurt immediately. And so the current levels of $110, $120 do not have the same effect of $100, let's say, a decade ago. And that's what the equity markets are looking at.
Own the thing. Behind the thing. Behind the next big thing. Invest in the backbone of the global economy. Brookfield. Own what's next.
Peter Piper persistently missed packages, so he scheduled his deliveries with Amazon Business. Peter Piper, and positively prospered. Amazon Business, your partner for smart business buying.
Yeah. But at the same time, I just wonder, at what point, at what backdrop with oil prices does that calculus begin to change? I mean, you say that US equities are sort of brushing off what's going on there, but would it be different, say, if oil were trading at 120 or 130 or even 150, as some people are prognosticating?
Look, if this conflict lasts much longer, this frozen conflict lasts much longer and oil goes to 150, then many things change. But at that stage, the Fed will have to step in, cut rates, support the consumer. Remember, this is a midterm election year, and I think that there will be this situation is more a political issue right now, more than an economic issue. And that's how we look at it. You look at the equity markets, the earnings are so strong, 27% year-on-year growth for S&P 500 companies, whereas the expectation was 14%. So it will take a lot to dislodge this AI-driven CapEx earnings power of the US equities. And the overall situation, look at the K-shaped economy, Jumana, the top 55% of the US households who own equities and houses and properties, they actually contribute to 85% of the consumption. So that seems to be fine.
Yeah. I want to go back to something that you were saying earlier, which is your expectation that if this goes on for longer, then the Fed may end up cutting interest rates. That is not the language or the messaging that we got from the Fed last week with those multiple dissenters. You had 3 dissenters opting against an easing bias to the language. What do you think the Fed policymakers are getting wrong then?
I think the 3 dissents came because the statement was quite dovish. And the dissent was for the easing bias, against the easing bias of the statement. So originally, the statement had an easing bias later on for the year, and therefore there are 3 dissents against it. So to me, it says that there is an easing bias in general, but it's too early for the Fed to telegraph it, to put it in statement, and that is why you got those 3 dissents.
Deepak, always good to chat to you. Thank you so much for coming on our show. Deepak Mehra, Commercial Bank of Dubai, Chief Economist. Well, coming up, Dubai Airports is looking to scale up flight movements after months of disruption caused by the Iran war. We'll speak with the CEO, Paul Griffiths, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Dubai Airports is scaling up flight movements after months of disruption caused by conflict in the Middle East. Passenger traffic in the first quarter declined more than 20% compared to the same period last year, reflecting the impact of regional airspace turmoil. Joining us now is Paul Griffiths, CEO of Dubai Airports. Paul, really good to have you with us after what I can only imagine has been an extremely challenging period for you. But I want to start with the weekend news, which is that the Civil Aviation Authority has now announced the full resumption of normal air navigation operations across UAE airspace. They've lifted precautionary measures. What does that announcement actually mean in practice, and what does it mean for your operations?
Well, Jumana, it's very big news for us because, of course, we were operating at something like 38% of our normal capacity in the skies, which was limiting operations on the ground. But actually seeing the announcements of 1,396 movements at DXB, which is our normal daily rate, is incredibly welcome news. That will give our airlines the ability to scale their operations back up to normal levels, and hopefully will then lead the recovery of passenger traffic and cargo traffic for the rest of the year. We're anticipating very strong recovery over the next few months, hopefully led by transfer traffic over the summer, and then hopefully a strong Q3 and Q4 for passenger visitors to Dubai. So I think this is very, very welcome news for us.
I see overnight you've released some of the latest figures, a 66% drop in passenger numbers for the month of March. I mean, no surprise there for the quarter, down 21%, as we were just saying in the introduction out to you. How does the momentum look in the coming months, and given the latest news as well from the weekend? What are the forward signals telling you about how quickly we can return back to full capacity again?
Well, one thing that we're very well known for here in Dubai is our optimism and our ability to recover incredibly quickly from adverse circumstances. I think we showed that during the pandemic, and I believe over the next few months you will see a record rate of recovery, led probably by the transfer market. The transfer market to which the UAE has access is about 100 million passengers a year. About 70% of that is captured by the Middle Eastern hubs, and we get 32% of that traffic through DXB. And during the summer, which is traditionally a boom time for passengers connecting through DXB on onward journeys around the world, we will see that lead our recovery and a very strong performance, hopefully, in Q4 of visitors to and from Dubai. And I think this will be a very good precursor to that with the airspace capacity opening up.
Are you looking for that perfect accent chair to complete your living room or office space? At Leather & More, we have tons of stylish varieties of accent chairs available for off-the-floor purchasing. These beautiful American Classics leather Hampton pushback recliners are available today. Call us at 8-324-0668. Visit our showroom inside the Hickory Furniture Mart, or visit us online at www.leatherandmoreinhickory.com. Hurry while supplies last.
Yeah. Well, has anything changed operationally since the first wave of attempted attacks or attacks? Have you had to change the way you think about operations looking ahead?
It's not really led to any long-term changes in our modus of operation, but as you can imagine, during the conflict, we had something like 100 alerts at the airports, which we had to make sure we followed very quickly. And our obvious prime motivation was to keep our customers and our staff absolutely safe. I think we will be successful enough. The brief to everyone was to make the operation at the airport seem absolutely normal. And judging by the feedback from our customers, I think that was largely achieved. We've managed to maintain a level of flight operations which has been quite remarkable under the circumstances. I don't think there's ever been a major international airport that's had to suffer the sort of interventions that we've had to deal with on a daily basis. And I can't praise everyone across the entire country and the staff and the civil defense, the military, the government for the fantastic support that we've received, which has enabled us to maintain our operations on a pretty much constant basis throughout the conflict.
Yeah. Let me ask you, Paul, as well, whether looking at destination flows, whether there's been a change in terms of outward destinations or inward destinations versus pre-war that you've picked up on in the last couple of months?
Well, obviously, what we've had to face is the fact that some overseas airlines have had difficulty securing insurance cover with the travel advice that their governments have been putting out. But now we've got something like 51 airlines. Our normal number's about 90. The missing airlines are mostly those from Western Europe and the US, and we're hoping that they will be welcomed back now because of the lifting of the capacity restrictions. And we've got something like 192 cities still connected to DXB compared to the normal 240. But we expect those cities, those airlines and those flights to be added back to our portfolio of routes incredibly quickly. So we are projecting to get back to normal operations and to get the level of customer support and response that we normally see in a normal year very quickly indeed.
Okay. Can I ask whether there's been any change to your annual guidance for passenger traffic by the end of this year? Obviously conscious that, we're just coming off a period of massive disruption, but what does that number look like now?
It's pretty difficult to project exactly what the end of year number will be, but if the recovery is as strong as I think it will be, I think we'll end up in positive territory. We were projecting to get to break that golden 100 million passenger mark this year. I think that may be relegated to 2027, and we're still confident of doing that. Our long-term plans, obviously, for the transition to our new airport, Dubai World Central, Al Maktoum International Phase 2, remain unchanged. Progress is still proceeding. We're preparing for that major transition in the early 2030s. So our long-term plans are not affected. And I think this will be just a short-term blip from which we will very quickly recover.
Paul, earlier on, you mentioned that some international carriers had been reducing capacity or operations. And I wonder how much of that is an operational consideration versus a fuel economics consideration. How worried are you about the rise in jet fuel prices and the impact it could have?
I don't think it's really connected with jet fuel prices, because I think what we've seen since the pandemic is a shortage of capacity in aviation markets, which has forced airfares up. And I think airlines have been profiting from that for quite a long time. I think the oil price increase will obviously increase the cost base, but airlines will still have to fill their aircraft and they will have to stimulate recovery. So I think that the keenness of pricing to attract people back in the skies will, in a way, counterbalance the increase in fuel costs. So it obviously is an unwelcome development in terms of airline economics, but I don't think it will affect the recovery as much as some people are suggesting it might.
Okay. And then let me round things up by asking about DWC. It's been a big focus, the expansion there. Are things still on track, or have they been pushed back a little bit by all of the recent disruption?
No, absolutely no change in our strategic objective to focus on Al Maktoum International's development. We are pressing ahead. There's absolute momentum here because it will be a game changer for Dubai airports. We're going to have to recruit thousands of staff, retrain them on what will be a radical new and innovative airport operation, the likes of which the globe has never seen. So we're completely undaunted by current circumstances, and we're pressing ahead to achieve this challenging strategic goal on time.
Paul, great to chat to you. Thank you so much. And wishing you the best of luck as things get back, hopefully, to normal in the coming months as CEO of Dubai Airports. Now for a look at some other stories we're following today. Berkshire Hathaway's cash pile soared to its highest ever as operating earnings jumped in Greg Abel's first quarter as CEO. After a slight decrease late last year, the cash hoard jumped to $397 billion. Abel also resumed buybacks, handing shareholders a payout for the first time in more than a year. Berkshire shares have slipped since Warren Buffett announced last year that he was retiring. The UK is set to enter talks to join the European Union's €90 billion loan plan to Ukraine. Britain wants to support Kyiv in pushing back Russia's front line and regaining sovereign territory. The move underlines what the British government describes as growing defense ties between London and Brussels. And a look at some of the regional bourses, and this was Friday's close here at the Tel Aviv Stock Exchange, and up 1.1%. Egypt as well, being propelled by strong macro story over there, sideways for Tadawul, but of course one of the best performing indices since the war began. Coming up, we're going to talk about OPEC Plus and their decision over the weekend to produce more.
Peter Piper's pepper picking proved painful. So he ordered the supplies he needed from Amazon Business. Peter Piper. And positively prospered. Amazon Business, your partner for smart business buying.
Good morning. This is Horizon's Middle East and Africa, our top stories this morning. President Trump says the U.S. will begin guiding neutral ships through the Strait of Hormuz starting from today. OPEC Plus agrees to a symbolic production hike in June, sending a business-as-usual message after the UAE's shock exit. Plus, GameStop pitches a takeover of online marketplace eBay for $56 billion. Just gone 8:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. Well, markets starting the week off with some green on the screen. Positive handover from Asia Pacific. S&P futures leaning towards positive as well, up about 15 basis points. Better close for Wall Street last week. A lot of focus there on earnings and the fact that, as you spoke about earlier, 80% of companies have actually beaten throughout the earnings season, and Magnificent Seven, for the most part, have surpassed those already elevated expectations too. So we got enough out of the big tech companies to keep propelling this rally going. So S&P futures today up 15 basis points. European markets also in focus. We're up 0.3%. Here we're keeping a close eye also on some of the geopolitical developments beyond the backdrop of sort of sagging economic data. We also need to keep an eye out on some of the latest announcements out of Trump and the fact that tariffs are back in vogue again. And he's announced tariffs on autos once again. So let's see the impact that that's going to have on some of those key European automakers. Brent also. So let's take a look at where oil is now. $108. A bit of a whirlwind, a lot of volatility in the space, obviously. And as the June contract was expiring, we hit $120 and then came down again. But the story this morning is the fact that President Trump announced earlier today that they have a plan in place to help get vessels that are stranded in the Persian Gulf and to allow them to safely navigate through the strait to get to the other side. He's called it a humanitarian mission. However, there are lots of questions about the details of how it's going to. He's called it a humanitarian mission. However, there are lots of questions about the details of how it's going to take place. Wall Street Journal Access reporting that the U.S. Navy are not going to be providing an escort service. And so, again, questions about whether there actually will be uptake and whether this is going to lead to an outflow of some of those vessels that are stranded. And hence why oil is still at $108. We dipped a bit or back to flat on the session. And then dollar yen, super topical. We're going to get into that in just a moment. Yen has not split versus the USD today, down 0.2%. But of course, we have moved around 4 big figures since the end of the week last week on reported intervention in the currency. So stay tuned for that. We have a conversation coming up about it. And finally, switch over. I mentioned a lot of volatility in oil, less so in equity space. The theme there has been strength to strength to strength. Look at those bar charts or the columns right at the end. It tells you week after week the S&P has ended in positive territory. April was the strongest month for the S&P since 2020. And because of that, we are seeing volatility get crushed. The VIX is back down to 17. At some point during the middle of the war, we got up to around 30, but it has fully cratered now. So that tells you that equities, at least, are completely brushing off the geopolitical reverberations from the region. Okay, let's also check in on how markets in Asia are faring. Avril Hong is in Singapore for us. Avril.
Yeah, Jumana, we are seeing a very powerful rally in Asia Pacific markets today. And the Kospi, TAIEX, they're climbing by the most in almost a month. It's really powered by AI. The chip stocks are rallying hard. This is following on from Wall Street's performance, those records on Friday, along with a slew of positive megacap earnings. And even in Asia, if you think of the likes of MediaTek that up its AI chip guidance, that is one stock that is among the biggest boosts on the TAIEX today. What's interesting also this earnings season is how investors seem to be chasing the rally post earnings. Now, flip the board. When it comes to the Japanese currency, of course, we have been following on from what we saw that reported intervention on Thursday. And if 2024's example is any guide, the authorities might be choosing to follow through for the messaging to be loud and clear for traders. And of course, there are a couple of ways that they can intervene, a number of tools and levers they can pull, maybe directly buying the Japanese currency, but also via rate checks, which is something that we saw earlier in the year. We are seeing sharp gains in the yen versus the greenback in the past hour, but that might also be a function of the thin liquidity given the markets that are starting today. Jumana.
Avril, thank you so much. Avril Hong in Singapore. Let's go back to energy now. Major OPEC Plus nations have agreed on a symbolic increase in their June production quota levels. 7 countries, led by Saudi Arabia and Russia, will add 188,000 barrels a day next month. The cartels aiming to send a business as usual message following the surprise exit of the UAE. Joining us now is Stuart Livingstone Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. There's so much going on in the energy space. Maybe let's just start with OPEC Plus. This is their first meeting without the UAE. They've gone ahead with the 188,000 increase in production, but it's largely symbolic at this point.
Yeah, I think they're trying to project 2 things. One is normality, which is fine, they can have a go at it, but things are clearly not normal just in terms of the membership. And the second is this very symbolic move. But the reality is you weigh up 188,000 barrels a day, which you won't arrive anyway because they physically can't put them on that off, at least a lot of the producers can't, with the projected losses in the oil market. So you look at the estimates coming out. We had Vitol a couple of weeks ago. We had ANZ this morning talking about basically a 1 billion barrel loss. And I think it's very hard for us to get our heads around what 1 billion barrels looks like.
Yeah.
It is an enormous number. So 188,000 barrels, not going to change very much.
Yeah, it's not going to move the needle. I want to draw viewers' attention to an interview that the Treasury Secretary, Scott Bessent, gave over the weekend. This was on Fox, and he said that the U.S. is suffocating Iran with economic and financial pressure, suggesting that the rulers in Iran or the leaders in Iran will eventually buckle. Let's listen to what he had to say.
We were running a marathon over the past 12 months, and now we are sprinting towards the finish line. And I can tell you that We are suffocating the regime, and they are not able to pay their soldiers. This is a real economic blockade, and it is in all parts of government, all hands on deck.
Peter Piper persistently missed packages. So he scheduled his deliveries with Amazon Business. Peter! And positively prospered. Amazon Business. With the smart business buying. Risk is a constant. It's something to observe and manage. When the pressure is on, I feel right at home. How do you manage risk? See Riku, where risk meets opportunity.
So both Besant and Trump are framing the U.S. naval blockade as being very successful. We wrote a story over the weekend, an article talking about all of the measures that Iran are undertaking right now to stop their storage capacities from reaching 100% capacity. I mean, how successful are they at diverting oil at this point?
They're pretty good at it. I mean, look, they've had a lot of practice. Here's I think, what the US administration is forgetting is that they have been dealing with this for decades. Not just the economic pressure, which is absolutely real, but, they were in dire straits economically before this war started. They still are. The Iranian rial is at a record low. It's been plunging. So they're absolutely right that they are squeezing the Iranian economy. What they're underestimating is the amount of pain that the Iranian leadership is prepared to endure, not just for themselves, but for their population as well. And I think there's an imbalance there between pain that the US economy, for instance, is prepared to endure, and that the Iranian economy is prepared to endure. So that's where we have a disconnect here between reality and the amount of pressure that this is going to impose on the Iranians to get a deal.
Yeah, and they've also been under a lot of economic pressure for a while now, and it hasn't really softened their stance politically. Stuart, let me just bring you up as well on the latest story of the day, which is the fact that President Trump has announced that they're going to be helping to, I don't use the word escort because it seems like the US Navy is not going to be involved in this, but at least to help some of the stranded vessels in the Persian Gulf leave the Persian Gulf. What do you make of the lack of market reaction to that today?
I mean, I think there's some skepticism that it will get very far. They are absolutely right. There are crews sitting on vessels inside Hormuz, that is inside the Persian Gulf, that have been there far too long. You're right. And there is real suffering there in terms of the crews. So they're absolutely right that this is a humanitarian effort. It needs to be done. But I think there is skepticism, at least in the market today, that this can happen because there's no evidence. What exactly is the mechanism? Can both sides agree on which ships? They're saying neutral ships. Who exactly is neutral in this conflict? So, look, I think we're all hopeful that you can get some of these stranded vessels out, and particularly the crews. But I think at the moment we're a little bit hesitant that this will be certainly in large numbers.
And perhaps there's skepticism around where the safe routes actually are. Otherwise, they would have gone for them already. Stuart, thank you so much. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Now, for a look at some of the other stories we're following today. China has ordered its companies not to comply with U.S. sanctions on 5 domestic refiners linked to the Iranian oil trade. Beijing's deploying a rare blocking measure aimed at protecting its firms from foreign laws it deems unjustified. The Commerce Ministry says the U.S. measures unlawfully restrict normal trade with third countries and breach international norms. The collapse of Spirit Airlines is cascading through airports across the U.S., leaving passengers stranded mid-journey and sending rival carriers into rapid response mode to contain the damage. The airline has canceled all flights and told customers not to go to the airport after failing to secure emergency funding to keep operating. Japanese Prime Minister Sanae Takaichi has met with her Australian counterpart Anthony Albanese in Canberra. A 3-day visit is expected to focus on deeper cooperation in defense, critical mineral supply chains, and broader economic security. Both governments share growing concern over the regional security environment, with Japan taking a more assertive military posture in recent years. And speaking of Japan, let's talk yen intervention. Traders are on watch for signs of further action by Japanese authorities after the currency's sharpest rally in 3 years last Thursday. For more, joining us is Bloomberg Markets Live strategist David Savage. So walk us through the price action towards the end of the week last week, reported yen intervention, and then what we're seeing this morning as well as a knock-on effect to that, David.
Absolutely. So We saw certainly that the yen is going to be in focus today. We saw intervention dollar yen move down to 155.50. We were back up around 157, and then just in the last hour, we saw the yen, shoot higher. And again, I think the traders are definitely on watch today with both Japanese markets and London markets closed. Japanese markets closed tomorrow as well. So, the question is whether Japanese authorities are going to look to take advantage of this thin liquidity to continue to prop up the yen. And certainly the historical parallel is there that traders are certainly expecting that there may be further action. But ultimately, these moves are about disrupting what we've seen as a negative feedback loop, and something that certainly Japanese authorities are increasingly concerned about with oil continuing to trend higher. So, certainly a risk, but what they're trying to do is introduce two-way risk to make sure that doesn't feed further inflation and put further pressure on JGB yields.
Yeah, I mean, essentially, you have a cautious Bank of Japan stance, and you have higher oil prices. So it's very difficult to see a sustained rally for the yen from here. Let me switch tact a little bit. I was earlier on looking at markets and what the European Open is going to look like. Tariffs once again on the agenda, with President Trump announcing these tariffs on European automobiles. What is the likely reaction going to be in markets today?
Yeah, Euro/50 futures we're looking positive, but it's certainly just another headwind for European equities and European growth. I think the consensus was with the Iran conflict that the pass through would be most difficult in Asia, just because the more direct reliance on imports from the Middle East. And then Europe, but I think that picture has become more complicated as we see, particularly in North Asia. If we look again to Asian equities today, have a real tailwind in terms of the tech rally and this global AI capex cycle. Europe isn't as directly exposed to that, and so certainly when we see,
Looking to build your own social media or live streaming app? We design and develop scalable AI-powered platforms tailored to your business. From concept to launch, we've got you covered. Get your free quote today.
With ANU, you can choose a general MBA or specialize like healthcare management, information technology, global leadership, and more. It's built to help you grow into upper-level leadership with skills you can actually use. Learn more at an.edu.
Added pressure in terms of potential tariffs and more complications in terms of trade, that will certainly add additional pressure on European equities.
David, thank you so much. David Savage from the Markets Live team. Well, coming up, political tensions are rising in Senegal, threatening the future of the ruling party. We'll bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Political tensions are rising in Senegal, with President Faye warning his own ruling party could be at risk of collapse as a rift with the prime minister deepens. Our chief Africa correspondent Jennifer Zabazaja joins us from Johannesburg. Okay, so how serious is this rift between the president and the prime minister? Are we looking at a potential breakup of the ruling alliance?
Well, Jumana, many people are seeing this increased strain between these two leaders and saying there is a real risk to the economic and the political stability of the country, especially if you take a look at what we've seen over the past few months. Now, really, this boils down to what had initially started as some internal disputes behind closed doors about some of the policy things that were central to the Pastef party's centralized. And now it's really become what seemingly looks like a power struggle at the front. Now, we should remember that Faye and Sonko founded this party, and now it seemingly appears like they're competing for influence of the party with varying degrees and visions for the IMF negotiations that we've been following closely, also personnel within the party and within the presidency and the administration itself, and even the future of the party. So much so that a few months ago, we heard the prime minister actually threatening to take the party into opposition if the president doesn't align with his vision. So what we heard over the weekend from President Faye is that he says the party is on a trajectory that risks leading to its downfall if nothing is done, and really saying that once the confidence is broken, there will be a new prime minister, and potentially many people are looking at this and seeing a continued rift between these two leaders and wondering what this means for the future of Senegal, what this means for 2029, and also what this means for the PASTEF ruling party.
Yeah, but at the same time, we were just covering all of those IMF discussions a couple of weeks ago, and that have been quite fraught as of late. How is the political backdrop going to influence the potential evolution with the IMF around another package?
It is having quite an influence on some of these disputes, Jumana, based on our own reporting. These two leaders reportedly have different visions for how to actually go about these IMF negotiations. We should remember that a lot of what is central to some of these disputes is that this new administration came in and came out and reported billions of dollars in hidden debt. And so that led to the suspension of this IMF program. And so the big question has been, when will we see a new IMF program with Senegal and with the fund? Well, we did hear from the president over the weekend, and he said that there is no fight with the IMF. He said that they do want a new program, and they're continuing discussions with the fund, adding that they are seeing that growth increasing, fiscal deficit has declined, and that potentially this is showing that the country is well managed. The question, though, and even what we heard from the IMF just a few weeks ago when we spoke to the Africa director, is a lot of the continuing negotiations are in the hands of the country, and the country needs to make its own decisions on what the future looks like in terms of macroeconomic policy decisions. If we're seeing potentially ruptures within the political establishment itself, what does that mean for the future decisions about a negotiated program with the fund? So many investors paying close attention to what this looks like moving forward.
Yeah, for sure. The political backdrop is raising a few question marks. All right, Jennifer Zabazaja, thank you so much, our Chief Africa Correspondent in Johannesburg. Now for a look at some of the other stories we're following today. Nigerian opposition figure Peter Obi has quit a coalition that planned to challenge President Bola Tinubu in the 2027 elections. Obi is a popular figure amongst Nigeria's young and urban voters. He cited internal divisions and legal disputes within the alliance for his departure. Coming up, the gaming retail chain GameStop is proposing to buy eBay for about $56 billion in cash and stock. Details on that story coming up next. This is Bloomberg.
Peter Piper's pepper picking proved painful. He ordered the supplies he needed from Amazon Business. And positively profitable. Amazon Business. What's the smart business buying?
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
The gaming retail chain GameStop has offered to buy eBay for about $56 billion in cash and stock. It is a bold attempt by the CEO, Ryan Cohen, to take over a well-established e-commerce name several times larger. Joining us from Hong Kong is Bloomberg News reporter Manuel Baigori. And Manuel, I walked in this morning and honestly, I was not expecting to see GameStop in the headlines. So what do we know about this proposed deal?
Indeed, Yomana, thank you very much. It was a surprise, I think, to both of us. What a bold move by Cohen and his company. Definitely interesting to see, and potentially a very, very large deal in the making. Obviously, the proposal is out there. It's a cash and stock proposal to buy eBay, the iconic enterprise. We'll see a lot of skepticism as come out as first reaction from some equity analysts covering the stock and the industry per se. Obviously, two businesses that have been in a bit of a turnaround on their own, and that some analysts seem to think that they are both doing well, but obviously GameStop, with its own peculiar history, is a much smaller business market value-wise versus eBay, even though it is true that they have a lot of cash in hand and they've also secured a big chunk of debt financing from banks. So definitely, the proposal is out there now. We'll see how shareholders of both companies react once they are able to digest the news a little bit more. But obviously, two businesses that have some also overlap in the collectible toys and resale. So there is definitely some complementary, assets in there as well.
Yeah, I mean, anyone who hasn't been following GameStop closely will associate it with the meme stock mania around COVID time, 21, 22. There's a whole movie about it with the Roaring Kitty and so forth. And you fast forward to today. First of all, it's a surprise anyway that it's looking to take over one of these legacy companies. But essentially, how good of a fit are the two companies going to be together, given their respective expertises?
Yes, indeed. I think that's one of the main questions that people observing the two companies have in mind, and also the market overall will be wondering how the two complement each other. I think there is indeed some overlap in assets, including collectible toys or resale. I think the two businesses in a way have been in a bit of a turnaround, trying to find the next strategic, mantra for the next 5 to 10 to 20 years. They've both been struggling in their own ways as consumer demands have been shifting from the traditional brick and mortar to more online. So they are kind of like trying to find their new identity. Now, one could wonder whether in that and turnaround of both, combining the two could make sense, but that is still a little bit too early to tell.
Yeah. Manuel, thank you so much for bringing us the latest in this potential big deal. Manuel Beccori. All right, quick look at active futures before we head out. Things are leaning towards green, but that is it for our show, Horizons Middle East and Africa. I'm Giovanna Brissett, in Dubai. Stay with me for Daybreak Europe. That's coming up next. This is Bloomberg.
It takes 90 seconds for this NASA-engineered AC cool down your room. It's smaller than a toast.
Hey, it's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Project Freedom. President Trump says the U.S. will get stranded ships in the Persian Gulf through the Strait of Hormuz. Tariff standoff. The U.S. faces trade challenges as China tells companies to ignore U.S. sanctions. Meanwhile, the Eurogroup says, let's talk. And investors await whether the Treasury will adjust its guidance on debt issuance this week. But let's get a check on markets around the world. We've had some action today despite all of the holidays. Here's Louise Moon for the latest from Asia and Europe. Louise.
Morning, Bonnie. So first up, taking a look at Asia. Now, the wider market's rallying on what we're seeing to be this, this AI optimism, this tech rally after the mega cap earnings over in America. Now, looking at that, the Kospi in particular in Korea also surging there. Brief look at the yen, ending slightly down there. Traders still on edge if there's some more intervention from authorities, as we saw last week. And then moving over into Europe, UK markets are closed today. So we're focusing on the continent, on Europe there. A bit of a mixed picture, really. Slightly down at the moment, being really dragged there by autos after Trump announced 25% tariffs on auto imports. And then a brief look at the euro there. Relatively resilient given higher worries of stagflation and higher expectations of rate hikes there, but the euro remaining relatively resilient this morning.
Louise Moon, thank you so much. And indeed, Louise said it there, tariffs popping their head back up again this weekend, just as it looked like the market was starting to calm over the Middle East. So we do have futures pointed higher, equity index futures. However, will that last? We'll be keeping an eye on automakers out of Europe, but also, of course, out in Detroit, which has been warning about higher commodity costs thanks to the energy spike. Futures are obviously what we're looking at treasuries-wise, because Japan hasn't been trading. It's obviously Golden Week in Japan. The market's still, of course, digesting a Warsh-led Fed, and what Paul Donovan is saying this morning might be diminished guidance as we go forward. And then if we take a look at oil, we did see another spike in the last few minutes. We're back above 109 on Brent crude now, and WTI above 103. This is the president says the US is going to get some ships through the strait. Iran, though, saying anything that involves US troops will be considered a ceasefire violation. Gold lower, and Bitcoin topped $80,000 a coin this morning. So it's quite a confused market, I would say. Let's get to some individual movers now. For that, we have Natalia Knichevich in the studio with us. Natalia.
Hi, Vanya. So I'm looking at shares of GameStop and eBay. So we see that GameStop is slightly down in pre-market. eBay is up by almost 10%. So GameStop plans to buy eBay for about $56 billion in cash and stock. The company built about 5% stake in eBay, and that move would represent a 20% premium from its Friday close. Now, moving to crypto space, I'm watching shares of Coinbase. They are higher by about 4% today. The company said reached a deal on a key stablecoin yield provision that would potentially clear the way for crypto legislation. And then finally, I'm watching two companies that went public on Friday, Hemab Therapeutics and Seaport. Both companies are lower in pre-market, but keep in mind gains were really strong on Friday. Hemab jumped by almost 90%, and Seaport Therapeutics gained 10% on Friday when both companies started trading here in the United States.
Okay, so there is some movement out there, Natalia. Thank you so much. Back later on, that's Natalia Knichevich. And coming up, more on this market with Tiffany McGee, CEO of Pivotal Advisors. But first, President Trump out with a new plan. He's calling it Project Freedom. He wants to help vessels through the Strait of Hormuz. He posted on Truth Social, for the good of Iran, the Middle East, and the United States, we have told these countries that we will guide their ships safely out of these restricted waterways. Joining us now from Dubai is Bloomberg's Onur Ant. Onur, have any ships gotten through with U.S. guidance, or what exactly is the current situation?
Well, the operation dubbed Project Freedom is set to commence today. As you pointed out, President Donald Trump said the U.S. would help some of the stranded ships in the Persian Gulf exit through Strait of Hormuz, and he was very careful to portray this as a purely humanitarian effort. So far, the most notable reaction from Iran has been that the Iranian military said it would, or it could, attack the U.S. military if it tried to enter the Strait of Hormuz. Now, however serious that warning might seem, it might mean little obstruction, if at all, in practice, because the U.S. military, even if it is involved in this Project Freedom, does not have to go into the strait to help guide those ships stranded in the Persian Gulf outside of Hormuz. What is also notable to note, important to note, is that there has been at least one attack on a tanker outside the Strait of Hormuz earlier today, according to the UK Navy, when a tanker came under fire from unknown projectiles off the coast of Fujairah, Bonnie.
Yeah, owners, would that suggest that Iran is attacking tankers it hasn't given express permission to cross the Strait of Hormuz to?
Well, to be clear, that attack is not, it's not clear who it came from. And also, in terms of reading into how Iran is reacting to this announcement, there's been an important development also earlier today. Joint Maritime Information Center said that it would vet humanitarian ships carrying cargo into the Persian Gulf through the Strait of Hormuz, which in effect suggests that the traffic will resume if it does both directions. And the fact that JMIC has made this announcement also suggests that there may have been a quid pro quo between the two sides as they try to resume a level of traffic through the Strait of Hormuz with Iran's tacit approval.
Fascinating development, owners. Thank you so much. That is Bloomberg's owner Ant in Dubai. US also facing some trade challenges. China has ordered companies to ignore US sanctions in an unprecedented move. Meanwhile, Europe says it's prepared for more talks after President Trump's threat of raising EU tariffs on autos. Joining us now is Bloomberg's Jenny Marsh in Hong Kong and Oliver Cook in Brussels. Jenny, what prompted this move by China, and now, of all times, just a couple of weeks before the president is due to visit?
Yeah, I mean, this is a very sort of unprecedented move by China. It's the first time they've ever directed companies to openly defy US sanctions. And it comes after the US took its own sort of unprecedented step and imposed sanctions on Hungary, which is one of China's biggest oil refiners dealing with Iranian oil. Previously, they'd only sort of targeted small so-called teapot refineries with these kind of actions. So China really viewed this as a huge sort of step up in US efforts to sort of choke off Iran from its biggest buyer, which is China. And I think, the message here from China is very clear, but they will not allow US sanctions to interfere with China's own energy security. They've had this sort of anti-sanctions blocking measure on the books since 2021 during the Biden administration, and this is the first time they've decided to use it. So I think it sends a signal to the US. They're sort of drawing a red line here over what they will tolerate in terms of US sanctions, sort of setting the terms of who and how China can sort of control its own energy supply.
Yeah, and then if we move to Europe, Oliver, you spoke to the Eurogroup president, and he actually had a little bit of a surprising response to this new threat of higher tariffs on autos. Let's just have a listen to what he had to say.
Needless to say, I think this discussion that's currently taking place is quite unnecessary and quite unfortunate. The last thing the global economy and the European economy needs right now is an extra layer of uncertainty on top of what is happening in the Strait of Hormuz and in the Middle East. If there is a deviation, obviously all choices will be on the table, all options will be.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices, innovate benchmarks for today's equity markets. Others, only egos. We see the era of billionaire athletes, a fad to some, the future of money to others. We see crypto's trillion-dollar swings, the end of jobs, or the end of human struggle. We see the endless funds fueling the AI hype. While others follow the noise, we follow the money.
So, Ollie, what did he mean? Because it doesn't sound like there's any retaliation coming for the threat. It was a little bit, of a nice response, really, wasn't it?
Yeah, well, I mean, I think it's because people are still trying to assess what this threat actually is. I mean, this came out of sort of bright blue sky, on Friday, basically effectively saying that the sort of her previous arrangement between the European Union and the United States was no longer apparently valid. There's 15% tariff on automobiles coming from the EU into the United States. definitely 25%. But the Europeans are still trying to figure out exactly why this is happening. The only thing that Trump really said was because it's the Europeans are not complying, apparently, in his mind, with the terms of the trade deal. I don't know if that is because there are specific issues he has, or because it's just taken a very long time for the Europeans to ratify the trade deal. We should say that it's not fully implemented yet. This is a trade deal that was struck back in July in Turnberry. There have been a number of delays to the trade deal, not least of which because the Trump administration threatened a whole other set of tariffs after the sort of Greenland spat. There's also the Supreme Court striking down the tariffs that has also made a delay. But of course, the Parliament also made some amendments to the trade deal, which is why it has not yet gone all the way through. So is this just a tactic for the Trump administration to try to accelerate the Europeans to get that trade deal through? Or are we going back to the drawing board here? Are we sort of beginning these negotiations for the trade deal? I think it's still very much an open question. And for finance ministers that are meeting here today in Brussels, this is definitely going to be on top of the agenda, though, of course, it was not officially on the agenda going into this weekend.
Can I ask you about the German response to the idea that Trump is cutting thousands of US troops out of that country?
Yeah, I mean, it's a really sort of interesting story. I mean, again, we have both the auto sector that's being targeted, that obviously hurts Germany the most. And now we're talking about 5,000 troops being withdrawn from German territory. We should say there's about 35,000 American troops in Germany. That's about half of the total that you have across Europe. So that's a reduction of 15% of those troops within the German borders. We should say two things. One thing, that this is part of the American agenda. This has been part of the military plan, was to sort of reassess their sort of global presence, and that the Europeans were going to have some U.S. troops removed. But of course, Bonnie, the second thing you can't ignore is the timing of this. This comes right after the German chancellor made some very critical remarks at Donald Trump, saying he's being humiliated in Iran and doesn't have a plan there.
Yeah, and he had been complaining about the chancellor as well. Jenny, let me come back to you and ask you whether anything that China does might actually impede the president's trip to China. Might he call it off, or would it take something more than this?
I think for now, the summit is still on. I think the question here is, how does the US respond to this? China sort of hit back at these US sanctions. And now the question is, how do the Chinese banks react? They go ahead and comply with the US sanctions, or do they take the direction from the Chinese government, which is very clear now, to ignore these fresh sanctions? If they don't comply with the US sanctions, is the Treasury Department going to go ahead and impose secondary sanctions as threatened? And I think if they do go ahead with those secondary sanctions, then you could really see things kind of escalating. Whether that means that the summit is derailed, or if it just means that the agenda is kind of a lot more sort of meaty and there's a lot kind of more sort of conflict and tension going into the summit, I think that's kind of an open question. But with just 2 weeks out, less than now, I think, the expectations are this does go ahead. Certainly, the longer the Iran war goes on, the more they have to talk about.
Yeah, but as you say, it's 10 days to go. A lot could happen in the meantime. Thanks to Bloomberg's Jenny Marsh in Hong Kong and Oliver Crook in Brussels. Let's turn to markets now. Bond traders awaiting Treasury's quarterly refunding statement this week. Bloomberg's Ben Ram joins us now for more. So Ben, every quarter, the phrase, for several more quarters comes into the statement. Traders keep expecting that phrase to change. Will it be any different this Wednesday?
Well, as you kind of alluded to, Bonnie, it does feel like Groundhog Day. But I think that, look, I mean, the Treasury refunding announcement is going to be a big event for the markets. There's no question about it. Because if they are going to, after the previous guidance, the Treasury is not looking to issue longer dated bills and longer dated bonds and securities. But, with the kind of deficit that the US has, they need a longer term funding, and they can't keep rolling over short term debt and bills. And particularly in this atmosphere where sentiment changes from one day to another because of weather depending on the outcome. So I think that, the longer they do it, the more open that they are, the risk of, sentiment changing, and particularly with these short term bills, because you have to keep them rolling over again and again and between increased auctions. So there's definitely the risk. And I think that the front-end treasuries are not yet quite reflecting that, but I think that they will eventually.
Ben, can I ask you about the yen, because we're back up to 157 and, that kind of territory now. So, obviously Japan is out on Golden Week, but I'm not sure if traders care if Japan is on holiday. Are the monetary authorities still watching this week very closely?
Yeah, I would definitely think so because I think that particularly over the holiday period, they don't want volatility to be uncocked and sending yen above 160 levels. But what is interesting, Bonnie, is that they came into the market around when it was trading around. Dollar yen was trading around 160. Now we've got 157 and change, and so I think that this, all the bank that they've got for the buck, which is not very much at all. So they've spent an enormous amount of money trying to defend the yen, and all it has gotten them is a couple of percentage points. So, this is symptomatic of what is happening in Japan. The Bank of Japan is behind the curve on interest rates. They need to fight this with higher interest rates to quell inflation. Instead, the BOJ and the finance ministry seem to be at different pages. The Bank of Japan is really agnostic about which way the yen goes. In fact, they would welcome a weaker yen. But I think that, in the case of the Ministry of Finance, they are very kind of watching that 160 level very closely. So they are not comfortable and definitely not on the same page with the Bank of Japan. But I think that any response, any meaningful and sustainable response in the markets has to come from the Bank of Japan, not the Ministry of Finance.
All right, we'll wait to see what they do at their next meeting. Ven, thank you so much, Ven Ram. Now, two other top stories trending on the terminal this morning. Major OPEC nations agree on a modest increase in their June production quota levels, a move that was expected before the UAE's exit. 7 countries led by Saudi Arabia and Russia will add 188,000 barrels a day next month. The move is largely symbolic, as the restoration of those barrels depends on the Strait of Hormuz. Fed Governor Michael Barr says stress in the private credit market could lead to, quote, psychological contagion and cause a broader credit crunch. Barr told Bloomberg that while direct links between the banks and private credit do not yet appear super worrisome, there were other areas of concern, such as the insurance sector's overlaps with private lenders. New Berkshire Hathaway CEO Greg Abel received high praise from investors after his first annual meeting since Warren Buffett's exit. Many who were on the fence about Abel's appointment to CEO say the performance won them over. The company posted first quarter earnings that showed its cash pile soaring to its highest level ever. Coming up, eBay shares jumping on GameStop's $56 billion takeover bid. More next. This is Bloomberg.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research by hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices, evolved benchmarks for today's equity markets. Bloomberg 10, live in San Francisco with Emily Chang and Tom Giles.
Has got his back, baby?
Join leading CEOs, tech visionaries, and industry icons for an unparalleled event.
What is the fate of search?
We are definitely investing for the long run. We want to help these players develop to bring their products to market.
I think it will be possible to make changes to our genome. Technology has been the driver to more abundance and productivity.
Bloomberg 10, decode the future, June 3rd and 4th in San Francisco.
This is Bloomberg Briefs. I'm Bonnie Quinn in New York. GameStop proposing to buy eBay for $56 billion in cash and stock, a 20% premium to its Friday close. Now, eBay is currently valued at around 4 times the size of GameStop. For more, let's bring in Bloomberg's Neil Campling. Bit of an audacious move on the part of Ryan Cohen. Neil, is this deal executable?
It's certainly a surprise, Molly. As you mentioned, it's eBay's 4 times the size. Now, the deal already is getting questions from some of the Wall Street analysts, and the biggest question probably is that the deal will require some $20 billion of debt funding to try and get this over the line. Now, as you mentioned, the CEO is ambitious. He's a controversial character. So I wouldn't bet against the potential plan. But there are lots of puts and takes to get this kind of deal over the line, and try and suggest that you could create eBay as a major rival to Amazon Well, to put it in perspective, Amazon spends more in a year in capex than eBay and GameStop's market cap combined.
You know, Ryan Cohen would lead the combined entity, according to Ryan Cohen, if it all goes ahead. What would he actually try to run? I mean, is he going to run an auction platform?
Yeah, great question. eBay's asset light, so maybe it's bringing kind of the digital know-how to such a business. But he's certainly bringing his own branding to the strategy now. I suppose in many ways, kind of eBay is a brand that needs some new impetus and new fire. We kind of it's one of those companies from a decade back when it had the real brand. So maybe that's what it's all about, is that rebranding of someone who knows exactly how to get excitement around a brand. That's for sure.
All right, we'll see what happens. Neil, thank you so much for joining us this morning. Bloomberg's Neil counting there. Coming up, State Secretary Marco Rubio set to meet Pope Leo amid President Trump's criticisms of the pontiff. We'll have a look at what's making headlines in your front page news next. This is Bloomberg.